All right, good morning to all. Sam here, and we are mid-morning, December 5th. I've had some members asking about NEO, and built into taking a look at the coin both against Bitcoin and the dollar is the inherent question that I get asked quite often. Is it better to trade an alt like NEO? Although it certainly is one of our top 10 by market cap, is it better to trade an alt against Bitcoin or against the dollar? Now, I'm going to answer that a little bit with some objective information as well as my own subjectivity. So here are the two charts right here. So here's NEO to Bitcoin, and then here's NEO to the US dollar tether on Bittrex, and I'll tell you why I'm doing it against the tether in a second now. So, of course, the first thing you notice is that we have more history here, at least on Bittrex, relative to NEO to Bitcoin rather than the tether. But if I were looking at these two and I'm considering a trade, and perhaps I've come over to CoinGecko and I know that NEO is one of the top 10s by market cap by looking over here on TradingView. And if I go to US dollar based and I look at market cap and I sort it by market cap, and I see that NEO is down here, we're in the top, well, maybe it's 11 or 12, but certainly we're in the billions, right? So that's, you might put the cutoff there, billion or above would be your top alts, with the exception of Bitcoin, of course. So NEO certainly contender. This is a major cryptocurrency, 2.57 market cap, 2.75 billion of US dollar market cap. And it regularly receives, a ton of volume, right? So we can see here, it's if I'm sorting by volume, which is almost always how I start my sorting, is by volume. I want to see where money and or capital or Bitcoin, if you will, is flowing, right? So here I want to see what's happening in that market, and if I look at it by volume, I can see that NEO is very active today. So down against Bitcoin, 6% to the dollar, about the same. So down, both about, approximately the same. Now, so if you were looking here, so a couple of things you can do. So over here on CoinGecko, well, of course, we see it's got a score of 69. So again, we know this is a very strong project. But if you weren't aware of this, in addition to reading about it and doing a little bit of fundamental research, if you're inclined to do that, we can go over and we can look at the exchanges here. And we can see where the majority of NEO is traded, and we can see it by currency, right? So if we look here, we can see currency and exchange. So we can see the vast majority of the volume of trading in NEO is against Bitcoin, right? So that point of note, okay? So I want to see where volume or capital is flowing relative to NEO. So that's significant to me that I see the vast majority of it is trading in Bitcoin. And then I look at my exchanges where Bittrex and Binance seem to be about the same. Now also over here, another place where you can look for that is over on Coin Market Cap. So if we come here again, we're looking at the charts there. If I go over to markets, I can see in the last 24 hours, I like to see where the volume is. Right? And so we can see on Bittrex, NEO to Bitcoin, the bulk of the volume here is to Bitcoin. But I can also see that I've got a fairly good amount of that volume is coming via the US dollar, but it's on Bitfinex, which as a US-based trader, I don't have access to. So Bittrex is where I would get access to it, but I can see here Bittrex trades it, as you may well know, against the US dollar tether. Right, so pretty significant gap in volume from here at 7 million in the last 24 hours to 34 million to Bitcoin. So I want to make note of that because I tend to want to be where the volume is flowing. So that's just a place you can go look and check and see where you're seeing volume and what exchanges, and that just part of doing your due diligence if you're thinking about entering the market. All right, so let's go back to our side-by-side charts. Knowing that the majority of the trading is happening in Bitcoin, but then looking at these two charts, this is where I get a little more subjective. For me, as a US-based trader, and this is entirely subjective, I don't really care where I trade it beyond my recognition of where the volume is. I really am more focused on where is the better technical trade setup. that's where my eye immediately is drawn to. Is there a trade setting up? And of course, it's easy for me to trade it in the dollar, but for someone who's not U.S. based, that may just not be something they would even consider. But of the two, so we can see we don't have identical chart patterns here. And very often it's similar, but in terms of what you may see, but this is pretty radically different. So we're seeing this correct. So putting it simply, we're seeing a series of lower highs and lower lows. Okay, so we're trending down. We're correcting this big impulsive swing that we had here, and now we're correcting it. But we're correcting it, as you can see here, in a series of stair steps. So if I were to open this up, right, and just I've got no technicals on it. So the first thing my eye is drawn to is that I've had likely some sort of impulsive structure here. And so I would have to open it up here. But here's a 1. Here I have my triangular 2 with this shallow C. Then we go up and I get my 3, 4, and I get my 5. So it doesn't, for this conversation, we don't need to go back and break this down on a 4-hour and get the wave count on it. Likely this is completed here, a 5-wave structure, and you can almost kind of see it as I open it up. We get our 1, 1, 2, 1, 2, 3, 4, 5, and now we're coming back down. So until we get some signs of stability here, and of course I'm on a daily, just take note, I'm on a daily. Until we see signs of stability, there's no reason to assume that change it happens until we see a break of trend. So, and I've shown this before. So here are the algo trades. So here from our swing high to low here, we come a couple of ticks from the 50, right? Almost always it's front run by a few ticks. Then here's their first target. They pop it. Then ultimately ends up going down to the negative 618. But the way you would trade that if you were analyzing, okay, so first question always is it trading technically, right? Can we see algo footprints? And that is about as clear an example as you're going to get. So from there, then I would pull to this, well, I'd pull to my lowest low, and then here was the pivot that traded technically, and we can see to and through. We got these wicks to and through, but ultimately it ends up, and you can see we had a little 5-wave sequence here. So likely we had an A, a B, and then a C to finish here. So within that we're getting an A, B, C, and we get the A, the B, and then we get it 1, 2, 3, 4, 5 to complete the C. So we wick through the algo targets, but we can see we've got a little Elliott wave structure there that is worth considering. So looking at that, so likely that's hard to say. I wasn't trading at that time, but so that's October of this year. That's really not that long ago. So my guess is this was a fail for bulls because it looked like this could have been impulsive here, but given the context of what we're going, we can see right now the trend continues. So despite this, then I would pull again. Right? Algos aren't going to get it every time, but despite that. If we went down to a smaller time frame, this might be interesting to pick apart. But we can see just again on the daily, swing high to low. We come up, we get in between. We get a spike through the 50 in between. So if I take that off and clear up the chart. So here's my 50, and then here's my target down here. So, given that, I draw, of course, I'm going to put a pitchfork on it and see, do I have any kind of confluence here with market geometry and structure, and this certainly is reasonable that we could end up heading towards this target. There's nothing to tell me otherwise unless I start to see impulsive action to move away from this. So just given that, I'm not inclined to be digging for a long trade in NEO against Bitcoin based on what I'm seeing here. But a lot of people are very bullish this coin long term. And we just looked at it. Certainly, it has a lot going for it. So the opportunity may eventually be there. But as I look at that, I don't particularly see any opportunity until I see some evidence that this trend has broken. Now that could be that we're going to come down here. We're going to hit our target. The algo target gets hit. We line up with the median line, and then we start to see signs of some sort of a reaction from that. We have the potential setting up right there for an algo target to be hit in conjunction with a tap of the median line, where we know from Andrew's trading principles that very often we'll see a pivot on the median line. But as of right now, and even as I sit here looking at it, you can see a little 1, 2, 3, 4. We may be going down to finish some sort of an impulsive structure here. We can see some corrective action here, so we get a 3 wave here. So potentially we've got more downside to go here. It doesn't have to happen, of course. And we're you know, you can make a case that we're double bottoming down here in this range here where we had, you know, prior congestion. So you could draw that across there and say, okay, well, this was a point of congestion before the run up, and we're coming back to that longer term support, right? So there's certainly a case to be made there that you're coming into this area of longer term support. But before, you know, really jumping on the long side, even if I go down to from the daily to the 4 hour, I'd want to see signs of some impulsive action here. So let's stay on the Bitcoin side of it, and then we'll go to the dollar side of it after we've been through that. So here it is with a little more detail and some analysis on it. So you had one of the reasons I wanted to use this coin today, and even though I was asked by a member, the reason I agreed with it is because I want to be sure to show examples of trades that are failing, right? So I want you to understand that, you know, a lot of the trades that I'm showing either setups or I'm going through how the market has traded previously. But, you know, you have to understand that we're dealing in probabilities, and my analysis, we're wrong all the time, right? And I think I try to make a point of emphasizing that as I do these videos, that it's always just probabilities, that the underlying emphasis through everything that I'm showing and teaching is a maniacal focus on risk control and money management. That has to be the focal point of any analysis. As cool as it can be to see the market moving with technical precision, and you get excited about the potential. Wow, now that my eyes have been opened, I'm going to do nothing but print money. Not the case, right? So it's just technical setups fail all the time, right? So that's why, you know, one of the things that annoys me is often I'll get comments from people, maybe they have some Elliott wave education, and they talk as though they know where the market is going. I got news for you. Nobody knows where the market is going. You know, I mean, now you could make some long-term cases and arguments about where the crypto space is going long-term, but nobody really knows. We're always just dealing with probability. So as a technician, we're just trying to put ourselves into a position where we have the potential for a pattern that has proven to repeat over time, and many, 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 many examples. We're trying to position ourselves to be there should that pattern repeat again. But there are no guarantees. There's only probabilities. And the market, will very often, the majority of the time, will prove you wrong, and you have to simply adapt to that. That's why I often talk about, you know, the little analogy that I like to use, which is the boxing analogy. Look, if you get in the ring, right, you put your money into the market, you're at risk, and you are going to get hit. You have to anticipate it. It should be, the expectation should first be, where am I wrong? How much am I risking? Can I afford to take that risk? Not, wow, look how much I can make if this follows this path that Sam has shown me, that, wow, I've got a 2 wave. Well, I must be going up to the 3rd wave, or I've got a corner pocket, so I must be going to the median line. You can't that's a very dangerous way to think. The way to think is, where am I wrong? And if I am wrong, on the assumption that I'm going to be wrong more than I'm right, where am I out? What does that equate to? What's the impact to my account, right? Is that going to be just, am I taking a jab, or am I taking an uppercut to the jaw? Right? You cannot put yourself in a position where your account can be impacted in such a devastating way that it's unrealistic to think that you're going to be able to recover from it. So thus, you know, I try and make an emphasis of always talking about the risk reward. And what we do, you know, within my membership and with my members, is look for those opportunities where we can identify low risk with excellent reward. Does the reward justify putting the money at risk in the first place, right? So we tend to look for things 3 to 1 or higher. And if the technicals offer that opportunity, then I'm very comfortable putting my money at risk in the market, recognizing that I know exactly, or, you know, fairly closely, what kind of risk I'm looking at, and can I absorb it if I'm wrong, on the assumption that I'm going to be wrong more than I'm right. And you need to consistently keep that in the forefront of your mind. Not, the new traders tend to look at the reward, not the risk. Right, so not to preach too much on that. I just want to make a point of keeping your eye on the right place, right? Not how much you're going to make, but how much could you lose. All right, so all of that said, so here, this is the 1 hour on Bittrex, and you can see what I have staring at right in front of us is a gigantic trade fail. Right, so here, this is the way I was counting it. I thought perhaps we had a truncated fifth here, right? So we had all the ingredients that you would look for. We had a 1-2. We had this big impulsive move here. We come down for a 4. We don't overlap the 1. All looks good, but we get this shallow move here. The expectation was we were going to go higher and put in a 1 up here. Well, hang on. TradingView does that first time you grab it. We would have put in a 1 up here and then back to the median line, and that was the anticipation. But what it appeared to me is that we've seen a lot of truncation in crypto, primarily in the C waves and the 5 waves, but I thought perhaps what we had was a truncated fifth giving us a 1-2, right? So thus the shaping of the pivots that I chose for the median line there and for the pitchfork ends up being fairly good. So the corner pocket trade here is a winner to and through the median line. So it's not that there wasn't a trade there. It's that going forward after that trade, we have just a gigantic failure. And you can see a couple of points here. So at the time, and I think some of us did take this trade because it was all set up there. And this is just, this is called getting stopped out, right? Get used to it, right? It's going to happen to you all the time. All the time. So if I open this up, you can see why we were looking at this as a potential trade. So the thought was perhaps we had a too low in here and that we were about to go impulsive, right? So coming out of that 2, we're expecting an impulsive move, and we get a very nice looking potential setup. That was the expectation. We had slight overlap here, but the idea was that if this was going to continue to move higher, that we had potentially a diagonal in the 1 wave of what would have been the 3rd. So the expectation was that we were moving up here, which would have given the overlap, right? Given the overlap right here, would have given us a leading diagonal, which can only be found in an A wave or a 1 wave. But given that this is the low of the 2, we thought we had the low of the 2 here. All the ingredients were there with this retracement here, and then the initial push-up that we had the potential for the 1 of the 3rd to the larger degree, right? But it fails, right? So stopped out. I was in that. I got stopped out. Hey, I get stopped out all the time. But it didn't hurt me, right? So it was, once we were here, there was no reason to go much deeper than that. So, it's a small loser, right? I'll take a small loser any day. I'll take 3 small losers rather than 1 gigantic loser, right? So anyway, the point being, so let me pull out. So here's the 1-2. Here's the failure on the expectation that we were going into the 1-2 of the 3 to the larger degree. Right, so this count is totally invalid now. We got to reevaluate the entire thing. This is no good. This, I suppose you could make the case that we may be doing something like this on the larger degree, that we may have an A wave here. So this is, let me take this up a higher degree so we can, so if I go to that, so we may have an A, B, C. And so technically, you could still have a pivot here because we have not taken out this low. But at this point, I would just call this a giant failure swing. And all we've done is double bottomed here. And even here now, you can see it's really failing again, right? So 1, 2, 3, so that looks much like we saw back up here. Right, so it looked this spike here. You see that, how it looks very much like this. So it appears to be trying to get going impulsively, but then it's just getting slammed back down. So very similar to what we saw here. So my evaluation of this, what I see is no trade. No reason to be pursuing this as a trade because there's nothing good happening here technically for bulls. And even here, you'd probably have to check that as well as the B, as an A, B, or a 1, 2 of the A wave. So we're shy of the 50. We're to and through. There's just no trade here. Why would you fuss with this? You're trying to force a trade just because you're excited about the long-term prospects of the project. Okay, well, that's fine. You certainly, that's cool. But there's no trade here technically, right? So my point being, I would not put my money at risk here until I see some evidence now of an impulsive move to lead us back into a new trend. Right now, I got lower highs, maybe, but this looks a lot like, to me, like we're just failing as we did here. So my view is, I suppose you could make the case that, let me put that back, that you may have done some sort of a 1 here, and then you could turn this, God, trading view, that's annoying they do that. We can get a 1, 2, so, maybe we could call this, I'm stretching a little bit here to even justify this. You might be able to make the case that you have a leading diagonal here into a 1 wave and you're just having a very deep 2. Technically, until you break this low, that's an argument you could make. I wouldn't trade off of it personally because I want to see a 2 hold the 786. When we're this deep, again, why? Why would you pursue this, regardless of how optimistic you are about its future? I suppose you could make the case that when it's this low, you're just in base building, and that eventually this starts to move higher. We know it's a strong project, so you could make the long-term investment case that I'm buying it because it's low. That's not how I approach the market. So for me, there's just nothing here until I would want to see now good confirmation that I have a 1 wave, a solid, well-defined technical 1 wave in, because if indeed this is going to be a significant low down here, and we don't know that it is, but if we were to get a hard pivot here, I want to see a good impulsive move come out of that pivot, knowing that if it ends up being a significant low, there's a long, long way to go. And I'm going to have no problem if I miss the 1 wave. I got no problem waiting for the 2 and then trying to catch the 3 of what would likely be the 3 of the 1 wave of the 3 wave. So just, again, so if someone says, I'm interested in NEO because I like the project, my reply would be, well, certainly there's no trade there technically against Bitcoin, in my view, for what that's worth. All right, with all of that said, let's go over and look at the dollar, because if you're a bull long term and you like the project, here's where you got to, I guess make a choice, right? So are you dogmatic about saying I trade only alts against Bitcoin? Because certainly there's an argument to be made, and a lot of people share the mindset that the only reason to trade alts is to accumulate more Bitcoin. I'm not that hardline about it. I base what I'm looking at. Any decision to enter the market based on what I see in the chart. Is there a trading opportunity? Is there, it's not about picking the coin that's going to be successful over the next year to 5 years. I'm looking for a trade that gives me a risk-reward scenario that I can look at and go, okay, I'm comfortable with that technical pattern, and I'm trying to get that move, not where it's going to be 2 years from now. I'm a technical trader. I'm looking for that move because I know if that holds, I've got 80% probability that reaches the median line. That's as far as I need to go with that. Whether it's in dollar or Bitcoin or Euro or Ethereum, I don't really care. I don't care. What I care about is where's the volume flowing? Can I trade that exchange? What's the technical picture look like? So here, comparing the two, so here, right? Look, so we can define a 1 wave here. We've got a 2 here that holds the 786. Yes, it goes through the 61865 box that we love, but we know a 2 can go that deep. It can be between a 2 or a B wave can be from the 50 to the 786. So the fact that we go deep here, it doesn't keep me out of the trade. I think we were trying to get it a couple of times here. We were looking for a deeper retracement. You see this alarm here? That was the effort to try and catch the first retracement of 50%. for a corner pocket, knowing that we had good probability that from here we'd go to here or potentially here. There's the algo target. There's the 100% of the one. So the trade doesn't get triggered because the retracement is so shallow. That's why that alarm was there. So currently not in the trade. But so what's the point here? So if I've got a 1-2, I can look at this and say, well, I haven't gotten to my median line. I've got my algo target here. I got my 100% because if, and we don't know, but if that is going to be a 1-2, then I'm going to qualify this move here as a 3 when it gets to 100% of the length of 1. Then I can make a reasonable assumption that I've got a 3 underway. So now I've got a 1, 2, and a third, and set up, maybe that I have to wait for the 4. But the fact that it's dollar, again, I don't care. I'm looking for this. Can I get a 1-2, and can I get that? You might have to move this over. Can I get that? So for me, the entry is right here, looking for that or that, right? More likely that. So I may well have, I don't love this structure. That's the deepest retracement. So I may have a diagonal shaping up here. I may have a 1-2 and I'm putting in the third. It's unclear what we've got right here. It's choppy. I don't love that at that point there. So that may be, so if I were to measure that off, so let's look from this low. Do I get, yeah, so I get this little pullback here. It didn't go as deep as I was looking for, but we get that little spike down. So potentially I've got a 1-2 and I'm putting in the third of the one wave, right? Still with good odds. So the algo target has already been met there on the 60-minute. So from that 1-2, you see here's the negative 23. So it may be that we're putting in the third of the one of the third. Remember, it's waves within waves. So there's potentially a trade setting up if that's a 1-2 and I'm putting in the 3-4. I'm not quite where I can call that a 3. Can I? Let's measure it, right? So this is where you can be objective about it. You don't have to wonder, it looks to me like a 3. Well, is it a 3? Could it be a 3? Well, it's not yet to the length of the one wave. So I don't know that that's a 3. I don't know what we've got here. I've got potentially a 3. I've got the odds play from the corner to the median line. I've got that working for that. But, until I see that some subdivision there, for all I know, this is just setting up for a failure to make the median line. But this is the next opportunity that I'm looking for right here. All right? So, I guess the point is, as a technician, if we're staying with a coin here, certainly this is an example where a technician, hang on one second. Sorry, a technician can look at this and say, all right, if I've got some sort of leading diagonal, I certainly want to qualify it because I don't know what I've got right there other than I've got good odds here of getting to the median line. So right now I just see no trade, but certainly one I want to watch. So I would move, I should do it right now, but it's actually on another chart. So I would move this up to here and save it. So I want to know if we're going to come back. Let's save it. If we're going to come back, delete it. I'll do it again. If I can get rid of it. Yeah, there we go. Jesus. Come on, Trading View. Not going to let me do it. Sorry, guys. Yeah, I want to delete it. Trading View, you're giving me a headache right in the middle of my video. You're not helping me. Trying again. Can't get rid of it. Yeah. Well, maybe I can edit this out. All right, I guess I've made the point here. The idea being, where's the technical setup? Can I qualify where I am in an Elliott wave count? If not, what are the fibs telling me? Are the algos in? Do I have market geometry that's trading in my favor? That's what's important to me. But I suppose the value here today is to go through that process of determining where is the market trading, where is the volume, What kind of coin are we talking about? Can I trade on that exchange if I'm seeing the volume there? Do I have a radically different trade setup between what I see spread to Bitcoin, where it would be your bias perhaps on an alt, but if the Bitcoin trade is not there, do I not want to look at the dollar? Yeah, I do want to look at the dollar. Certainly a coin with a market cap of $2.5 billion. Yeah, I want to look at that. If that's better, I'd take it without hesitation. I don't care if it's in dollar to Bitcoin. That's me personally. A lot of people would differ with me on that, but that's my view of it. So with that, I guess I'll wrap it there. I went kind of long today. Sorry for the little technical glitch here and everything else. So, okay, that will wrap it there. I'll be back with more later.